Having another look at order entry, and we're just looking at these on a 5-minute chart because you can do order entry on 15-minute, 30-minute, 60-minute chart. I wouldn't go any higher than a 60-minute, but I'm just showing you what it looks like on a 5-minute chart. One characteristic that I do want to show you is you see these candlesticks. Look at the difference in candlesticks between here during the more liquid sessions, and look how the candles become somewhat splotchy and kind of they're somewhat gapish here as we get into the late New York session. As it dries up, it's fairly random price action. However, traders are still referencing the key levels, and as you can see here, how they're still referencing these important key levels. As price swings down, it references resistance and support. On a higher time frame, we would just see this as a wick, but here we see it as full-bodied candles. Now let's move forward, and price has formed a base of support, and you see here one trade that I like is when market liquidity starts to thin, as we can see here as indicated by these candles versus the more liquid time periods. I'm going to watch this low, and if this is a key established low using Fibonacci's, pivots, trend lines, support, resistance, and so forth, if I believe that this level right here is a key low, we do have 8,600 right here, the figure, but if I think this is a key low, then I'm going to trade long as close as possible. I could trade it at 8,600, the test of 8,600 here, but I may be more inclined to trade it right here at this low. Now you could trade it here at 8,600 with a stop, 25, maybe 30 pip stop, 20, 25, 30 pip stop. Or you can take the chance and it may come down lower. Then you can enter if it spikes down lower to the base of support that was established this day. Price sneaks down, and as price comes down and tests this level, that's when you want to trade long as close to this level as possible. That way when you get this small bounce, you've covered your dealing spread, and you would like to see the market continue to move above 8,600, which is establishing itself as key as well. You want to move above 8,600. That would help your trade, and it's going to take some time to leave you in a pool of pain before it starts to move above 8,600. Now that it's moved above 8,600, you can take your 25 pip stop and you can move it up to maybe 15 pips. Price comes down and tests again and starts trading above 8,600 again. That's how the market works. So let's say your fill was 85.95. Now we're at 05 and 15. We're up 20 pips now. Okay, 25 pips before price comes down. Now we're in the middle. Now we're in the middle of Asian session, when liquidity is quite thin. As you can see by these candlesticks here, this represents very thin liquidity. Even during this time, you see how as the market started to thin out, it was just unwilling to go below the previous day's lows here. Now look, now we're moving up nicely. We move all the way up to 30, so we're up 35 pips. You're probably out of most of your position, probably on this type of trade maybe 80% of your position now. And now we see price holding above this level here, 86.25, dealing within the 25 to 30 range at very thin market times. Now watch what happens. Watch the clock down here. We're just trading in this little range right here for you scalpers. Now